Hello and welcome to this exam tips video relevant to the ACCA December 2017 examinations from Phoenix Financial Training. I'm Vignesh Sivakumar, here to share a few tips on paper P4. P4 is an extremely time-pressured exam with a lot of technical content, although students who have covered key areas of the syllabus and practiced sufficient questions, a reasonable number of questions under timed conditions do really well in the exam. Please do make sure that any questions you practice from now till the exam are done under time conditions, because it's not just a matter of whether you do well on the question, it's about can you execute enough inside the exam hall under those time pressured conditions. In terms of key areas that you must focus on, as you are aware, the exam has two sections, a 50-mark question in section A and 3 25-mark questions, of which you need to do 2 in section B. Valuations is expected to be a major part of the upcoming exam. This could cover commonly tested valuation methods such as free cash flows, when you may need to estimate the free cash flows over a planning horizon and calculate the present value of that at a relevant discount rate, whether it be the WACC or the cost of equity, depending on whether you're using the free cash flows to entity or equity method. Now, an integral part of the same question could be you being asked to estimate the WACC, which may involve use of principles of risk-adjusted WACC. So typically, this would be either a case of two companies merging when you have to combine their beta values to get to a relevant WACC, or a case of one part of the business being sold, in which case you need to extract the beta relevant to the remaining part of the business that stays within, excluding the part you've sold. So it will involve some intricate risk-adjusted WACC calculations, which can then be used onto the valuation. Alternatively, the examiner might use the P/E ratio methodology or the dividend valuation model to try and estimate the values of companies, but most certainly valuations is definitely there, has been there in exams, and it is here to stay. Please also ensure you are thorough with the valuation of real options using the Black-Scholes option pricing methodology. It has not been examined for a reasonable amount of time, and there's a good chance the examiner could throw a question, maybe do a small little NPV, standard straightforward NPV, and then a BSOP real option at the end. Or alternatively, a theoretical question on BSOP. So please do make sure you look up the question on a theoretical question called fail on, which was done a few years ago in the P4 examination. It is a pure theoretical question, talks about things like the Greeks and the sensitivity of an option to changes in the input variables. That question covers more or less all the key areas you need to know. It will be useful to ensure you review that before you go in, to ensure you're right on top of the theoretical aspects as well, just in case he puts in something on those lines. Adjusted present value has not been heavily examined. Now that could be a separate question or a part of, say, something like the valuations question, where there's a new project introduced and you're asked to evaluate the project with the standard APV adjustments like subsidized interest and tax benefits and so on. You should expect a reasonable portion of your exam to have wordy content on general areas like the role of trade organizations like WTO, IMF, a little bit of Islamic finance, maybe role of treasury could also be part of the discussion. Dark pool trading is another small area. So you will have small bits and pieces of knowledge on these areas being examined. Though it may not be for a lot of marks, it's still easy marks that you can pick up. Do make sure you review the risk management element. There's surely going to be a question on risk management. It's hard to predict if it is interest rate or Forex, but given that they're so standard, it is so easy to review a couple of questions on interest rate and Forex. On Forex and interest, please make sure you work through the various instruments, such as how do you work with FRAs and futures and options and swaps in the case of interest, And in the case of Forex, I would primarily focus on futures, options, and forward contracts. And as long as you can execute questions on these areas before the exam, you would find some easy marks to pick up, mostly on Section B, but it's quite possible it can be a part of Section A as well. Please do ensure you get the professional marks that are there in Section A. Yet again, there are easy pickings in the exam. There's no way we can afford to lose the 4 professional marks for the report structure and layout and neatness of what you do. Besides that, keep your cool. There will be tough areas in the exam that will baffle you a little bit, but that will not be 90% of the exam. That will probably be between 5 and 10% of the exam. So I wouldn't stress too much. Focus on the easy marks. That's the way you need to really be progressing, studying towards P4 and also performing, executing in the exam hall. Focus on the key marks. There's definitely enough to score really, really well. Good luck. I wish you all the very best.